29th day of June 2023. That's probably significant if you live in Australia, because it means that the end of the financial year is one day away. Now, we might even try and discover what that means, if anything, to the markets in Australia in particular, of course. I'm not sure whether well, I know it's not in a lot of places, certainly not in London, the end of the financial year, but if it is in other places, then that could well be relevant as well. We'll have ideas on that. Ash will have an idea on that. Maybe Phil does as well. In fact, Phil does. I think we might ask him what that might mean to the markets tomorrow. I know it's the time by degrees for Phil tomorrow, which is interesting, coinciding with the end of financial year. I wonder, does that mean we only get a change of direction in the Aussie markets? Good question. Let's have a look, see at gold before we go any further. Gold. That's silver. I've got an order on silver at the moment. Selling below today's bar. And my stop loss is above yesterday's bar. If you want to follow that one, entries at $22.65, and I've got a stop loss at 32 pips, whatever that means, 22.97. That's what that means. And the first take profit at $22.30. That's on silver. But let's look at gold. Bit cranky with myself that I didn't take this trade on the daily from, was it Monday's candle, I think? I think I spoke about it. And for the life of me, I can't imagine why I didn't take it. I'll have to look at the recording. But there you go. That was the fella right there. We'll see. As far as the breakout is concerned, let's take a look at that. Range is pretty clear to the high side and current bar to the low side. So let's just put that in. Trading straight into DR1. And this top of this range that broke, retested. Yeah, it's interesting. And the low is at the lows, or just a little bit beyond the lows. What does that look like on the daily chart? Plenty of space. Get under there. There's plenty of space to the downside, which is my bias. Upside looks fairly loose up to the weekly pivot, which is up there. So if we can get through DR1, that's your risk there, I believe. DR1, bounce into that and go this way. So let's wait and see what that candle does when it closes. I'd really like it to close up here somewhere. That'd be good. It's not likely to happen though. But, do you really want to go short here? Anyway, they're not the rules. I'll just change to the gold trading account, actually. I keep forgetting to do that. Gold trading account is that one. Okie dokie. Right, I think I can put these in now. The entry for the short, which is likely to be the first to trigger. 1902.55. We'll go 1902.50. So sell stop, not buy stop. Interesting that we're back down near the 1900 mark, eh? 1902.50. Sell stop. 1902.50. And the stop loss, which is the high of the range, is 1912.84. Let's go with 1912.90. And take profit. What have we got on offer? DS1's a bit too close. Let's go with DS2. And the level is not going to tell me. Level's going to be 1893.96. So let's go with 1894, eh? That makes sense. 1894. And that one's in. The long, buying, and to buy stock, correct. 1912, 1913, was it? Can't remember. 1912 something. It's like 1913, doesn't it? We'll go with that. In 1912.90 is where we're going, isn't it? 12.90. Stop loss. Same as the entry for the short, 19.0250. That didn't work. 19.0250. There we go. Take profit for the long. We better make it DR2. You could sneak it up to the weekly pivot, and if it looks like it's on fire by the time we get there, if it triggers, I may consider that. 1922.75 sounds like a good number. 1922.75. Oakley dokley. In she goes. So short will trigger here. Hate it. Don't like it, but they're not the rules. Profit here. Stop loss here. Looks about 1-to-1. Pretty close. Let's see how that goes. Rightio. I need to find out if our YouTube buddies are all happening. So just bear with me. Yep, looks like we're going out to YouTube. Hi, YouTubers. Nice to see you. Righto, the short looks like it may trigger very, very soon, but not necessarily. Whilst that's mucking around doing what it's doing, we'll come back and check on that, of course. Let's update you on two trades that I'm in. Euro versus the Swissy is one. Not on this account. Trading this bar here. That doesn't look terribly promising at the moment, but while there's life, there's hope, I suppose. We're in a little bit of drawdown. Stop losses up here and looking for a bit of help. So if anybody can help and get out there and sell some euros, that'd be good. The other one is pound versus the CAD, and also selling on pound CAD. That trade was this bar here, also in a bit of drawdown at the moment. Looking at the daily pivot to be our saviour. So I think if we get a close above the daily pivot on the 4-hour chart, probably get out of this at a small loss. But let's see what happens at the daily pivot. Hit all your 4 trades. Philip, good on you, mate. Excellent. Doing better than I am this week so far. I'm in drawdown. And they're the only 2 trades that I'm in. With the 2 I was watching for the week, in fact, I traded this one, or placed an order on this one, let me say. Kiwi versus the dollar. I was looking for it to break above this trade line here. So my entry was above that bar. Stop loss was below it. And as you can plainly see, we got absolutely nowhere near an entry. And in fact, the Kiwi has tanked against the dollar, as have a few of the currency pairs. The other one was Euro Aussie, and I'm waiting on that to give me a sell signal. But that doesn't look likely either at the moment. And the reason for the sell signal is I was looking for this channel to turn price around. Hasn't done that, smashed straight through it, gone to this resistance level, producing a hint of it's not really a pattern that I would bet my life on. but it's starting to form a bit of a broadening price pattern here. So I'm looking still for the short on euro versus the Aussie. And after what, 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row of not just bullish activity, fairly strong bullish activity, and it's gone up like a rocket. I'd be expecting a pause at some stage. Maybe today's the day. And as Phil will explain to us later, it's time by degrees day tomorrow. So that could be a little bit of a turning point for the Aussie, which has been wholesale selling going on in the recent past. So looking for that one to turn around. The other Aussie pairs I think might be worth a look for you as well, because it has been so weak. And 9 days in a row, if you want to go back in history and see the last time that there were 9 days of buying on euro versus the Aussie, you may be stretching your ability to stay awake, because that doesn't happen often, that's for sure. So that's most definitely still on my watch list, as is Kiwi versus the dollar. But I think Kiwi versus the dollar have to do a lot of work now to get me interested in buying it again, or putting another buy order in. I'm still waiting on CAD Swissy to give me another entry, and it refuses to do so. So I'm still waiting on that. It's looking a little bit more promising, however, now. Because if we were to come down here, break that level, find this support area, then come back above that level, retest it, then I'd get interested. Can't trade it up here. Just doesn't make any sense to me, because it's been strong level for a little bit, and I don't want to jump in at that level. If it broke and were retested, different story, but much rather pick it up down here somewhere. And as I said before, this area here looks likely to me. So there may be plenty of downside in CAD Swiss before it jumps. Silver, as I said earlier, I've got a short on silver, and I missed the entry. And I'm pissed at myself for missing the entry, as I did on gold. Gold was actually, well, this was the best candle, actually, because it was nice green little body sitting there, and I missed it. So I'm trying to pick it up underneath today's bar. When I looked at the charts this morning, I could see it pulling back towards this area. And as long as that high wasn't taken out, which is where my stop loss is, I figured there'd be a strong chance that we'd try this downside and maybe even try this low again. So got my entry underneath today's bar, underneath the live bar, which is unusual, but, well, not that unusual for me, to be fair. And my stop loss is above yesterday's bar. So if you wanted to follow that, entry's at $22.65. The stop loss is at $22.97. And first take profit is at $22.30. What else am I looking at? It's Thursday, so therefore we have to have a good look and see what the euro's done. And look at that. What a dog thing, damn thing. We haven't had a daily pivot test today, guys. Isn't that interesting? So what would I be looking for? Exactly that. How could we produce an entry? Here's one way. We could get a close here and then a pullback bar. If that were the case, then I would look to trade that bar there. Cool. Philip, you got the silver. Good on you. Look, it was a good trade, that really was. And I'm, as I said, pissed at myself that I missed it, as I am more so on the Aussie. The Aussie was an absolute clanger of a false break with this bar here. Entry there, stop loss there, or probably stop loss there, to be honest. And bang, straight down to the monthly pivot. And I missed it. Not happy. But that's the way she breaks. Dollar index, we're going to have a look at that. As I said to my guys this morning in my preview, just too tough to call this at the moment, in my humble. I have got a bias long, as you know, and that's based on the structure, which is a prolonged, if you like, box range. And we last visited the extreme of that range here. And this, to me, looks like a potential higher low. based on that base, based on the base. So I'm waiting for a potential entry here, and I just can't find one. It's a bit messy, has been a bit messy for days, as is evident from the chart. But as soon as I get that opportunity, I'll be looking to buy this, which probably converts to a sell on the euro if that were to set up. Do I like that? Why not? But look at the mess. You can see a head and shoulders forming there on the daily, I suppose. Where's the neckline? So ugly. It's so ugly. Looks a bit like Sid James. But I'm still waiting on something to unfold here, and it just won't. Maybe a false break up here. I don't know. Let's wait and see. That's about where I'm at. Dollar versus the yen just keeps going and going and going and going and going. And I've got very little doubt that we're going to test this high at some stage. Trading that from here is not the game I like to play. So I'm not sure if I really want to be in that until comes back to here, maybe. Makes sense. So that's really it, mate, I think. How you doing?
Yeah, not too bad. It's silver was the one that really stood out for me with what you were just saying. I agree with you on silver. It's
looks mate, weak. You're off. You're a long way off, Mike.
Sorry, buddy.
There you go. That's right.
Yeah, silver looks weak to me, and I'd agree with you on that. I'm a bit cautious. I'm the market's a little bit difficult for me this morning. The Aussie CAD as well is another one. I'll show you a couple of things that I've got going on.
Jules got a couple of interesting comments in there when you're done as well. We'll get to that.
Yeah, Philip, let's talk about the yen as well in a moment, because actually I agree with you. Philip's saying that there might well be a potential reversal coming, and I completely agree. And let's talk about the yen in a moment, because I like the yen for a long, but let's sort of see why the long may not be ready to go just yet. So we'll start with silver, and it looks to me like silver is. You look at this, and obviously we're kind of, if on the 4 hour it looks like we've hit this lower high, sorry, this lower low and lower high here. We're at the bottom end of that, kind of the lower end of the range, which is my slight issue with taking the trade. But I like that, on the hourly, when I break down the hourly, same sort of thing, but this is my slight issue with it. Just these this level of support here, and we're not through that. The trade for me on silver would have been this one here. As that pushed back up, I would have wanted to take the short on the close of that bar. But that, because that comes and meets this area here. But yep. That I missed. So now it's just not as attractive. Same sort of thing with the Aussie CAD. I quite like the Aussie CAD for a long, but the issue with it again is that we're sort of nearer the top end of the range. The daily pivot looks like it should add some support, and obviously stops under this level would be, that's what I'll be looking at. So I wouldn't be looking at much of a move. 13s. I mean, there's all manner of potential targets that would suggest that it's going to be a decent 2 or 3 to 1 trade. That's probably the area there, and maybe the possibility of carving out an inverted head and shoulders. Retail sales from Australia today were positive. Is that enough to drive the Aussie to the upside and take us through these levels? I would have thought not. And I think what's probably the most likely to get this thing on the move is the data out from the US, which is pretty massive, which is why I suspect we're relatively quiet so far this morning. We haven't really gone too far. I looked at the NASDAQ, and the NASDAQ is a real tricky one. I think the NASDAQ is probably a short when you look at the longer term time frames. You look at this on the daily, and we've got this really steep channel here. It's just coming up there, I think. Yeah, that's where it is there. Much better to see. I mean, it's a really steep channel, but you can see that there is touches on either side of this, and you can see it better on the 4 hour. Actually, what I might do instead is get rid of that, and let's do it like this. There's the level there. And if we copy the same line, it looks like it's around about there. Now, a measured move on this leads us down to a level which I think is a lot more attractive and quite an interesting level in as much where the kind of patterns are, because that leads us right down to this low here. And if this thing is going to reverse, it's in and around this area. If this thing is going to reverse, then it probably needs to give us a reversal pattern, and that reversal pattern from what I would be looking for would be something that dropped down, bounced, and then created a kind of a right shoulder here. So you kind of have left shoulder, this is the head, and this is the right shoulder. But I know it's, you know, there's a long way to go before that can happen, and I'm not saying that that will happen. But when you look at the measured move, and the measured move suggests that it's down here, and the strength of the NASDAQ kind of overall, that to me would suggest that if this is going to reverse, then it's probably going to need to create a reversal pattern, and you know, reverse a bit larger, I suppose, you know, so really get it going. Because you look at this on the dailies, and it's just parabolic. You know, the moves to the upside in the daily, in the weekly. You know, you looked at those bars in the weekly as well. And of course, the monthly has just kind of taken off over 4 months. We've had no respite to the downside, and there's still a chance that this really, it would have to close under this level by tomorrow. But if it did close under that level, then I think that the move to the upside is questionable, because you know, you've really got this high up here, potentially these lows coming down here, and then there would be you know, a possible equal area here, you know, where you do see some resistance, and then coming down and testing this area here. That's on the monthly. Now it's going to take a while to permeate. The real kind of conundrum, though, is the economic data, because the economic data has been solid. And even yesterday with the bank stress test, all of them passed. I'm not sure whether there's a caveat in there or not. I haven't. That
surprises me.
Yeah. They've all passed. Yes, my favorite Head and Shoulders, Philip. That's what I'll be after. Yeah, it surprised me as well, mate. And this is the thing, you know, we just seem to be getting constant economic data which suggests that the US is able to withstand. So far, amazingly, it's withstood the rate hikes. You know, we haven't seen anywhere near the same kind of problems in the United States as we have in the Eurozone, as an example. You know, it's just it's quite astonishing. Jobs data is still holding up. GDP is out today. So today we've got really important data. We've got PCE price index, big thing, because obviously if that comes in hot, that's going to suggest the central bank may well go, and depending on how hot, it's going to suggest that they could go maybe a couple more times. That could drive it lower. We've got initial jobless claims, which in a way are becoming more difficult to read, because if the jobs market remains tight, that suggests the economy is robust, which is good. But it also suggests that the central bank is going to raise interest rates, and that before was a big problem for equities. Doesn't seem to be the case anymore. If the jobs market is loose, then it suggests the reverse. Weaker economy may well be, and it is starting to loosen a little bit as well. But a weaker economy may possibly driving towards recession concerns again, but maybe puts the central bank in a situation where they don't have to raise. So things are really kind of difficult to ascertain at this stage. And of course, the last one is the GDP numbers. So I think the way that the NASDAQ's most likely to come down is a combination of weak jobs market, strong PCE price index, and a weak GDP, suggesting recession on one side, but inflation still kind of like sticking in there. Where and this is the concern that investors did have, is that the central bank would raise interest rates to the point of breaking the economy. Well, they've raised interest rates, tamed inflation a little bit, but haven't broken the economy. So you've kind of got this this unexpected scenario, which is kind of forming. And it makes it very difficult to know really which way that things are going. Same with the yen. Same with the Nikkei. Nikkei, it just parabolic moves to the upside with the Nikkei. first week yesterday, now this is starting to look a lot weaker. First week yesterday where we saw outflows of Japanese equities, and you know the situation we've got, that's just under that level. Now I don't know if this is of interest to you, mate, when it comes down to a slingshot, that test, that area, that could be interesting, right?
Yeah, sure.
Yeah. So and with an entry under this bar, this is going to look really interesting. Japanese, so the outflows of Japanese equities for the first time in 13 weeks, I think it is. And the situation now, and you know, going back to Philip's point about the yen, I just saw on Bloomberg the Mark Cutmore, who's I think one of the better ones on Bloomberg. He brought up this chart of purchasing power index of the yen, you know, the yen versus the dollar, and it's at an extreme low, you know, away from the dollar. It's a little bit like the Big Mac index, I guess, you know, where you compare the value of a Big Mac. If you were to buy a Big Mac in Japan and you buy it in the United States, and then do the dollar yen exchange rate, is the Big Mac actually cheaper in Japan? And it looks like it's more expensive in Japan because of the purchasing power index. So it looks like that's well out of whack. So it looks like people are paying a lot more money in Japan than they are in the United States for their goods and services. When it comes down to parity, you know, considering the exchange rate differential. Now, what that suggests is that there could be an unexpected shock in policy from the BOJ, and the reason that is interesting on two sort of fronts is that if there's a shock from the BOJ, then we're just going to see the yen completely revert very, very quickly. It's going to reverse. You know, you look at this and it's you know, the move to the upside against the yen right across the board. I mean, look at that against the Aussie. It's just so extreme that it suggests that we're just going to get a massive drop down. But the problem that we've got is that the timing of that announcement is impossible to gauge, because we don't know when enough's enough for them. You know, that they're not really in the camp of, and they haven't been in the camp of, we are going to let you know what we're going to do in the future, and you can choose to believe us or not, as we've seen with the Fed and as we've seen with the ECB. You know, they're basically saying we're raising interest rates. The BOJ is saying we're not raising interest rates. However, we all know that, or in fact, forget interest rates, because they control the money and with propping up the currency in other ways as well. So they're more likely to do that than raise interest rates. But last time out, it was a complete surprise. You know, when they decided to control the currency last time with changing the rate of what they were willing to pay for the bonds, it came out of nowhere. So trading the yen long is going to be one of those situations that I don't think you could take it as a regular trade where you sort of see a setup and take it. I think the only way to do it would be to have your account spread right the way out, and dollar cost average it up. So you're buying at little increments, and make sure you got deep pockets, because the chances that it reverses are high. And the chances that they come out with something extreme are high, but catching it is going to be, as I say, a nigh impossible task. You know,
it's
you can wait
like
for the next
for quite some time because of the absolute disdain for the currency over the last, but as you say, positioning yourself for that is not an easy task, because it's also volatile at times, and that makes it very, very difficult to position yourself stop loss in the right place. Very difficult.
Yeah, well, exactly, Matt. And I don't think because of that very aspect, I don't think you can use a stop loss. I think you're just going to have to cover the whole market. You know, you literally have to cover it till zero, which is which some people will be doing because they've got huge billions of dollars in a hedge fund or whatever. But for the likes of us, it becomes a very, very difficult task, and for that reason, you have to wonder whether trying to get into the yen early doors is worth it. I wonder whether we just say, look, you're just going to have to ignore it, because at some point it will calm down again. You know, after the initial big bang, it will calm down, and then you'll have opportunities. But trying to actually pick the move is, as I say, it's just an impossible task, and I just don't know whether it's worthwhile trying to take it on, because you're going to see a false signal after false signal after false signal. You know, every time there's an expectation, could they do it this time? They don't do it. It's going to go in the opposite direction. You do it again and again and again, and by that time you might have burned out your account. So you could say, I'm going to put 1 cent per, I don't know, whatever, extra $10 or something to buy the yen up, and eventually it will turn. But even that in itself is, when do you time the start of doing that stuff? Because things change. Things can change in a heartbeat. So, for me, the yen is just not. It becomes more difficult to go short on the yen now because of the differential in purchasing power. But but going long, it just seems a bit too early.
Philip's got a very, very good point on the purchasing power. Because there's a comment apparently on Forex Factory, Philip's telling me, that says that social escorts are getting cheaper in Japan. Isn't that wonderful?
Very, but yeah, very, very.
Anybody in need of a social escort, you're getting it at a discount rate in Japan very shortly.
Yeah.
There you go.
There you go. So that's how they're gauging it now. I'm surprised Forex Factory picked that up. But I suppose it is all. They're all kind of using these different sort of ways to try and value something. And I suppose this is the other way that you could do it with the yen. This is definitely looking like it's in a trend to the downside. And if you want to avoid volatility, just avoid the longer term timeframes, because if this is coming down to somewhere around this area, then you could start kind of like positioning yourself. I mean, that would still be a near 3-to-1 trade on the daily, and I think that it'd probably be better for longer term traders than shorter term traders to try and take on the yen. That's the Aussie yen, of course. Same with the dollar yen.
What if Philip Lowe on Tuesday, this coming Tuesday, says Aussie's going another 25 basis points? Does that change that?
Yeah, it probably would. It probably would. Yeah, because I think a lot of the move, when you look at the Aussie, a lot of the moves that have been driving it lower has been to do with the potential that the Aussie is probably done. That the RBA are probably done. So I think if he did come out and surprise, then yeah, you would see a rally in the Aussie. And the Aussie's interesting, if that was to happen, it's interesting, but probably not against the yen. I against the dollar, it looks like it's interesting. As I say, I like it against the CAD. I really like it against the CAD. It might well be, it's getting, that's as I say, that's the issue. And I suppose you could wait for a close above and come back again, but it may not be quite as attractive to everybody then. But the Aussie looks like quite an interesting currency for some upside, but it's not the one that you'd sort of like say fundamentally we should be looking at strong Aussie. This week it was all about the euro, really the euro and the CAD when it came down to the seasonals. The CAD hasn't really played ball, but the euro has. Then on Tuesday, because of the fundamental aspect, the dollar then started to come into play, and yesterday was a really, really good day for the dollar. And I guess that's the other thing. We see such a huge day for the dollar, and this is the other thing that's putting me off silver a little bit. We see such a huge day for the dollar. The possibility that we see some profit taking, it starts to ramp up a little bit, particularly before economic data. We've got GDP, we got labor market, and we got inflation data. All of that could reverse what goes on with the dollar, and investors and speculators will know that. So there could be some profit taking. So we might see the dollar reverse right up until those numbers. But the size of that move, very, very difficult to predict. And you would also be on the counter trend trade. So, really the way to play the dollar, to my mind, would be wait for a potential reversal. Let's say that the pound pound dollar ends up here, or even better up in this area before those numbers come out. Then you can see what the numbers suggest, and then go short this currency if the numbers agree. And if they don't agree, it'll be too late to go long. So if you're looking for dollar on the buy side, you really want the dollar to ease back into that data point before taking it on, because a lot of investors have made some pretty good money already, or certainly traders, shorter term traders. They made some really good money yesterday. Big moves, right across the board with a dollar. Huge moves.
Do they want to get back into the market on June 30? Having seen that?
Tomorrow?
Well, today and tomorrow, really, at the end of the day, I suppose.
I think that there would be I think there would be appetite for it if the data suggested that there is longer to go, and that's really where we are now. It's whether that data surprises. If it surprises, let's say PC surprises to the upside, there is further to go, and in that way you'd go straight. Personally, I would anyway. I'd go straight over to silver, because that probably hasn't had the move that some of these other ones have. Or maybe even the euro, euro dollar short, if those PC prices maybe go north of 5%. But if they don't, then there may be just a little bit of jostling. There might be some quietness. The week tends to offer one good day, one really volatile day where you see big moves. It's quite irregular for it to offer two, but it does happen. But I would have thought that if you've made your money yesterday, the safety is probably now on the sidelines until next week.
Yep. Here's an interesting one as well from Tajul.
Yep.
Tomorrow, of course, as we know, is the end of the first half of the year. But it's also the day, and I didn't know this, that the US switched from the LIBOR rate.
Ah.
Did you know that? I didn't know that.
No, I didn't know that. No.
Interesting.
Yeah, I mean, I don't know if that'll have any effect. We're coming very close to July the 4th, of course, as well. So Independence Day, and that will have its own, I mean, it's funny, actually, the market tends to rally into these kind of like these kind of important events. So even if we did see...
It's a thing as well on Wednesday, July 4th, as a buy, isn't it? I think on the stock markets.
Yeah, exactly. Yeah,
that's an annual trade, isn't it? As I understand it.
Yeah, and then these holidays do tend to kind of like create some kind of rally. So and if you sort of take everything into account, there's no reason, unless that those numbers later on really sort of shift the market around. There's no reason to kind of suggest that the US economy is in any sort of stress. As I say, that the banking sector passed the stress test yesterday. We're not really seeing, and in fact, the mortgage and the housing data yesterday was solid. So there's kind of nothing to see when it comes down to the dollar, and it's possible.
I'm going to say I find that really, 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 really hard to believe.
Yeah, it's amazing, mate. Do you know what though? It's possible that the eventual effects of what's gone on just haven't permeated through, because if you think about mortgages as an example, if you raise the base rate of interest, pushing mortgages higher, it doesn't mean that everybody's mortgage goes higher that very next day. It could take a year, 2 years, in some places 7 years.
I take your point. And in America, 30 years.
In some cases, yeah.
Didn't think. Well, I did think of that earlier. I just went out of my head. But now that softens that somewhat, doesn't it?
It does, because if you think about where we were, for so long, why would anybody go on a variable rate when interest rates were at zero? Why would you bother? No need.
Well, indeed.
So that's
if you can lock them into 30 years in particular.
Yeah, well, exactly, mate. I mean, I don't know, the interest rate would be slightly higher, but yeah, you'd be more than happy with that, wouldn't you? But this is the thing. If we don't offer that over here, I didn't know they offered 30 years in America, but over here you can get a 10-year mortgage. I think that's about the max. And this is the good thing about being in this industry, is that I was concerned about something like this happening, and I managed to secure most of the debt on mortgages last year for 10 years. I was like, stretch it right out, because next year's could be a a very, very difficult period. So that certainty is really, really comforting. It's really good. But for many people, they would have got 2-year mortgages. You know, 2-year mortgages is the most popular because most people don't necessarily have the financial education to say, where's the real deal? You know, because on the 2-year, they're going to offer you the best rates. So you think, oh, brilliant, you know, that's the deal. But where's the real deal? You know, it's a little bit like buying cheap and buying twice. You know, that's not really always the best way to do it. Sometimes you're better off paying for the more expensive product because it lasts longer. And actually, that's the real deal, not in sort of like getting something, you know, cheap, which is going to last half the time, or you know, or even a fraction of the time. But many people would have got on that 2-year mortgage because of, you know, thinking that was the deal, and it may well be the same in the States, and that would be an interesting statistic to look up. Where are the majority of people's mortgages sat? Because if it was on the 2-year, next year they're going to be struggling. Yep. You know, and a few of those, you know, in fact, you're going to see it every year. This will be the first year that you see you know, those 2-year mortgages from 2 years ago. They're going to start to, you know, that those people would have started to expire. Next year is going to be the same, and then you just sort of like see this this snowball effect, and I guess that's what we're waiting for. You know, it's of course not all about home ownership, but everybody's affected by the housing market in one way or the other, whether it's that you've got a mortgage, which most people do, or you rent, which most people you know, you either rent or your mortgage. Most people haven't paid their mortgage off. Most people don't own their house. So rents are going to go higher because, you know, buy-to-let landlords would be affected by the mortgage rate, and
we're seeing that big time here where I live, and throughout Australia, where rents are already ridiculous, and a lot of the blame has been put towards Philip Lowe, because I think it was maybe around about pandemic time, maybe last year before, I can't remember, that he said that interest rates, I'm not sure of the exact wordage he used, but most of the groundswell against him will maintain that, he said, interest rates will not go up until 2024.
Right.
You know, 2 years down or 3 years down the track, or whatever it was. And of course, those who went out and borrowed $1 million at 1.5% or 2% or whatever it was are now faced with a 6.5% interest rate. That's just got to be so crushing to anybody who's done that, really.
Well, do you know, the other side of this,
there has to be stress involved.
Yeah. Well, you know, interesting.
And it's not sustainable.
No, it's not, mate. And what you're saying about Philip Lowe's an interesting one, because all of the vitriol for people's economic situation in this country are to do with the government, not to do with the central bank. Yep. You know, it's Rishi Sunak and crew that are kind of getting most of the blame for the economic situation, and rightly so in some respects, because, you know, Brexit, as much as people would love to deny it, does have an impact. We don't know how much of an impact, but it does have an impact. And of course, it was the Conservatives that kind of led us out of the European Union. So
actually, that'd be a really interesting documentary, wouldn't it?
Yeah.
What has the effect of what's the Brexit effect like? What is it now? 5 years down the track?
Yes.
More.
Yeah. Well, actually 7 years. It's 2016.
Yeah, 7 years down the track.
So we've got so with Rishi Sunak and crew, of course, they also negotiated the kind of leaving clauses. So it's not just that they negotiated us out of the European Union, but they're also sort of like trying to deal with the aftermath. So, you know, that they're getting a lot of blame. And you know, then you sort of like come into the other sort of side of it, that governments have to borrow. You look at debt to GDP ratios right now, over, you know, they're north of 1%, north of 100% in many countries, particularly the United States and the UK. So
Yep.
you've got this debt to GDP ratio, which is higher. They need to have borrowing so they can continue to grow the country in the public sector. And yet they are paying a much higher interest rate when they're paying those debts back again. So there's another aspect, and this is what what you're saying about the surprise that we haven't seen the effects. And this is where you start to say it's got to come. It must come. If you've got debt to GDP above 100%, you've got mortgages that are expiring month over month over month. At some point, the consumer and the government are going to get hurt. And if the government get hurt, then of course, that's when you start to see layoffs, and the unemployment picture genuinely sort of like start to become under stress.
Recession / borderline depression.
And the only thing that seems to be hanging in, particularly for the Nasdaq and stocks, is this whole birth of AI. A lot of people are kind of hanging their hope on AI and how AI is going to save them, so much money in so many respects. Well, of course, that's really new technology. That's only just been ChatGPT was only sort of November last year. So that new technology will, of course, have some sort of regulatory hurdles to jump over, and we're already seeing that in the EU. They're already sort of starting to talk about regulation, and we saw what that did to the crypto market. So there are headwinds, there are things that are difficult, and we're in the summer. So Putin's mutiny seems to now been crushed, and he will go again when it comes down to the winter. Another brutal winter, and energy prices probably are going to start reversing and going in the opposite direction again, and again add to the inflation problem, and showing that the possibility that all those interest rate hikes, not only will they stay where they are, but they've done absolutely nothing. So it might not be this year is the point. It might be next year that we're really going to see the pain.
Can't wait.
Yeah.
Can't wait.
Mate?
Rosy,
well, I'll tell you what it
picture
does do, though. I'll tell you what it does
give you some trading opportunities. That's what it does.
Yeah, it will give you some trading opportunities, and this where we push back to gold. We saw what happened with gold, like towards into last year. Sorry, when was this? Yeah, this is the end of last year. This is what happened with gold when the inflation narrative started to pick up. Now, of course, they're not going to be able to raise interest rates continuously, and it depends on really that 10-year kind of balance and everything else. But if things are going to break, then gold again becomes really interesting. And again, it's probably too early to buy here, but when you look at this monthly, it looks like it's got some ways to come down. But gold does become a fascinating prospect if what may well happen completely comes to the fore and does end up happening. So I don't know where the opportunity is to trade it, but when it comes down to just buying it up, it's probably starting at the bottom of this area here, or within where we are now. Actually, all those people that have called for $10,000 in gold, they didn't mean in the next 6 months. I'm sure. They're looking sort of like way down in the future. So gold is one of those things, and that's sort of like something that is our job as speculators as well. Is how far into the future can we see, and how much can we take into account?
Okay, few things. One, I want to talk to Phil in a little bit about something Taj yours put in the YouTube chat, and that is the 4th of July holiday one, and how that if there's time by degrees involved there. But also, Phil does a fair bit of work with precious metals, and Taj, yours telling me that July is COMEX delivery month. I'm not sure what that means to precious metals, but Phil will have a fair idea. Phil, there's a question without notice when you've got your head around that one. The other thing was gone straight out of my head. Was what? There were two. Philip's got a list. Let's have a look at Philip's list. First, I don't know, where's XTI gone? Don't know. it's disappeared off my chart. For some, that's because I've got the wrong account. That's why. But let's bring it up. I was a fan of buying oil, and it just hasn't set up for me at all. Why has it done that? Don't want that. I want that.
We haven't got your chart, mate.
That would be because I haven't shared. So let's do that. Oh, we could have used yours, actually. Why am I bullish on oil? Well, it's pretty much based on the chart structure, or the structure I see anyway. What am I doing? Which could be there, could be a bit tighter if you want, going there as well. Doesn't really matter. It's all saying the same thing to me. And that is that we are at the bottom of this range. And if that range is not good enough, then that big double bottom staring you in the face here. And pretty much have gone sideways since. So therefore, I'm prepared to use this most recent base as exactly that, a base, and look for a higher low in here. Just hasn't delivered it for me at this point. Maybe we get a clearer picture on that after the news. And also, I don't know if OPEC are meeting this week or what they're doing, but I think I heard that oil inventories in the States maybe were going to reduce. I'm not sure why. So that adds to my flavour. But I just can't find an entry yet. Maybe I need to break these pivots and come back and give me that higher low in here. But I agree with your directional bias on that. Philip, anything, Ash, fundamentally?
On
oil?
Well, certainly, I think we need to take note about what's going on in China. And it does seem to be that the Chinese economy is starting to be under stress and weakening a little bit. I don't know how the US is not being affected by global events, like that. There's things going on kind of around the planet where you think the knock-on effect would be, because China make everything, so you think that there would be a knock-on effect, right? Felt right the way across the board. We haven't really seen that yet in America. I like oil, but I'm not a big fan at this current stage because as I said the other day, the Saudis cut production and yet oil still went down, and that tells me really that's
an issue.
It's an issue because the economic environment is probably much more important right now than how much they are supplying and don't supply. So I'm not super keen on oil. I'm not saying it's going to break down necessarily, because we might even be at fair value, but I wouldn't be really that interested in any setups to the long side just yet. But that's not to say, I mean, this is another one, mate. We talked about gold. This is another one. When we get to around about September, October, maybe even November, as late as November, I'm not sure it'd be that late. But when we get to those periods, oil will be something that I'd be really, really interested in buying because of what happened last year.
Yep, cool. Interesting, of course, always that we must keep in mind that it only costs, well, I think it still only costs probably a bit more now, $40 a barrel to get it out of the ground. So whilst ever it's up here, it can still go lower. And as we saw, how long ago is that went to zero? 3 years ago?
Yeah.
So, yeah. Just because we've got a base here doesn't mean it's not going to fall. But definitely my bias is for the upside.
I think,
at this point.
The situation in America if correct me if I'm wrong, I think they'd run their inventories down to really, really low levels, and they're now buying a fair bit back.
Oh, are they? Okay. That's interesting.
Which is sensible. It's sensible, really, if you think about it, because now it's down at these, this particular price. I mean, I remember Biden saying months ago $70 was their buy price. So you know, if they start to kind of increase their inventories at this particular price, they're going to be ready. And most, hopefully anyway, you think that most countries will be doing the same thing. I don't know how long they can store it for, or how big the areas are that they can store it for. But if they've got any sense about them, they'd be storing as much energy as possible going into the winter.
What are they using to buy it?
Well, the US.
Yeah.
Which currency?
Well, they'll be buying it in their own currency, one would suspect.
Yeah.
Until the Saudis go into rubles or whatever they're going to do. I
Yeah,
don't know.
well, I'm not sure whether that's going to happen or not. I mean, this is the other sort of dynamic about oil as well. Of course, with the strength of the dollar, it pushes the price of WTI down. So that's another dynamic that needs to be watched. You know, if the dollar does weaken, and it doesn't look like it's ready to weaken just yet, if the dollar does weaken, then again we start to see the likes of WTI go higher. And you know, if those chickens come home to roost, and we find that that debt to GDP ratio does come and bite them in the United States, then if things like gold, things like oil, commodities are going to be of huge value.
Cool. Gold versus the euro. I think we spoke about this the other day, didn't we, Philip?
We did.
And you're in short. Wow, there's a nice little seller bar there too. Yep, cool. I can't get in, obviously, at this point because it's gone too far for me, but a pullback makes perfect sense to around about or there somewhere, maybe there. That'd be a nice place to sell it. Yeah, I missed the entry on gold on the dollar. That was really a pain in the bum. But anyway, yeah, short to get long. I think, yeah, we've just spoken about that really, haven't we? When is the question? The next one on Philip's list is CAD Swiss. Okay, well, I'm going to bow to your particular bias at the moment because that works perfectly for me. But as soon as it gets to that point, I become a buyer again. And the buying is based, well, at this point here, rather. I think that's an excellent place to buy CAD versus the Swissy. And if I have a look at the bigger picture on CAD versus the Swissy, all-time level right here. And if it can climb its way back above there, there's a massive reward available, I believe, even just back to the top of the range. But if it reverses good and proper, and gee whiz, you could have a field day. So that's my ultimate bias. And this little dip below the all-time lows perhaps is giving us a very, very good opportunity to buy it at the right price. But at the moment, I agree. Downside is probably the best. And I reckon the monthly pivot and this little left shoulder here makes perfect sense to me. So I'm on board with that. Long pound versus the Aussie. Well, we've spoken about that one. And the only trouble for me, of course, is the price at which I'd have to buy it at this very point in time. Too expensive for me. Also got 3 amigos sitting here staring me in the face. So immediately for me, as I see that, is not to buy it, but to look for a sell. And where I'd like to sell it to becomes bottom of the range with interest. So the 3 amigos are my little signal for whatever range we've been trading in will break to the downside. Not necessarily a long way. In fact, that would probably be as far as I'd want to go with it. But if I can get in up here somewhere, that becomes extremely attractive. So I'm not a buyer of pound versus the Aussie for 2 reasons. 1, I've got a terrible price to buy it at. And 2, I've got the 3 amigos there threatening to break us down to the downside. Then may become a buy again. But for me, no long, no short right now. Anything, Ash?
On the CAD Swiss?
On anything. This is pound Aussie.
Oh, pound, yeah, well, but the pound is another one that had a strange old day yesterday. You know, after all the after all the fireworks that we kind of seen of raising interest rates and everything that's been going on. I think the issue really with what's going on in the UK is the economy. The economic kind of situation is just so poor that that I guess people are just waiting really to short this, but they can't short it because inflation is so high. But no, mate, do you know, when it comes down to today, I think yesterday's move was enough to put me off really looking for anything until US data.
Next week.
No, not next week. I'm happy to trade today, but until that US data comes out, because it was such a big move, I really now want to know is either do we see a rally against the dollar and then things start to reverse. And that doesn't mean I'm only interested in dollar pairs, because everything will be affected. But I don't think this particular environment with such big news, it's not just GDP, it's a PCE and a labour market data. There's a lot really today, later on. So that is probably enough to kind of put the lid on moves in just about anything. So until that data's out, I'm not really that interested in the market. I really want to know, what that data is. Is it obvious? It might not be obvious. We'll see the moves after it, and we might have to wait to see what the setups are. But is that move? Does the data suggest something obvious? And if it does, then I will trade it. I mean, I'm looking for shorts in things like the Nasdaq, but that data might suggest that it's better to go long for a little while longer.
Okay, cool. Okay, one last thing from me, and then Phil, if I can just rob your brain for a couple of minutes, that'd be awesome. Our edge on the euro versus the dollar has been expended just about, because, as I said before, untested daily pivot always attracts my attention, especially on a Thursday, but I like it to get far away from there as possible. There's our first buy area is DS1, as always, as I've explained so many times. Euro dollar likes to hang around inside DR1 and DS1 on an intraday basis, and nothing's changed. There we go again. So we've lost that edge pretty much. So let's talk about precious metals and COMEX delivery month, Phil.
COMEX delivery month. Your last month, they predicted this was going to be a big one. Yeah. So what did you
What does it actually mean?
Which delivery month? So I'm a long way from an expert on any of this stuff, Jeff, but I do follow it a bit.
You're the closest thing I've got to one, mate, I can tell you.
Yeah, so as you know, I guess you know that the COMEX, a lot of it's based on the futures contracts on the gold and the precious metals anyway. And at the end of each month, their inventory is categorized into a couple of different things. And one is there's a figure that's basically, say, the amount of gold to cover supposedly the paper contracts that's not available for negotiation. And then at the end of the month, I won't say people like you and I, because it's been proven it's almost impossible, but there's
to have people like you and I, you mean,
to cash what they can. What some people can do is, those in the system can cash their contracts in for physical.
Okay. Yep.
And the delivery month means that physical. Now, what's been happening is that the physical demand, and I'm talking now in general over the last, we'll say 6 months, it has got to the stage where there was more physical being converted every month, every 3 months, than was available. So the COMEX had to do something about finding some precious metals from somewhere to deliver. And that number has got worse and worse and worse. So to do that, of course, I think they've got to cash in their shorts or whatever they do, whichever way around it is. And so the bottom line is anyway that the physical, there's more and more and more physical being taken out of the market, to the extent where they're talking about this month or next, this 3 months, this conversion date, or the next one is going to be critical mass, where it starts hitting the fan. So yeah, that's why it's interesting at the moment, basically.
Does that give us a directional bias?
Well, all things being equal, it would, but I wouldn't trust
It
those,
should, shouldn't
those buggers as far as I could kick them because they just get, like, what is there, silver on the silver now? There's at one stage it was for every ounce in existence, there was 100 paper contracts on it. So 100 people thought they owned silver and they didn't for every ounce on the planet. And the gold's getting just as silly. And yeah, so it's really push coming to shove. And yeah, the other, I'm trying to think of the name of the, there's a contract that the gold guys are always talking about where they, not a contract, an agreement where they've changed. I don't know whether you realise, but gold's been changed from a novelty, basically, I suppose, a pet rock to it's actually a tier one asset now. So that's why the governments have been accumulating it. And so it's starting to get in short supply. But I mean, they've been saying that for so long, mate. I've just, as you know, I've basically given up. You know, it's like uranium. You watch it for 20 years before it does anything. They just line anyway. So you just got to work out. But of course, the beauty of it is for those of us that do watch it a bit is when it starts hitting the fan, we will know when. So hopefully we can take advantage of it. I just got a few bit of precious metals in the physical and treat it as insurance, and I don't bother trying to trade it anymore because you'll get burnt quite regularly if you're not careful, you know what I mean? You can trade it, but it's, you know, why trade something that you know is about 99% against you when you can trade something that's 50-50, you know what I mean? So I don't get that too wrapped up in it. I know there's fanatics, gold fanatics and stuff, but I'm not one of those one-eyed, you know, drink the Kool-Aid type people. So that's probably all I can offer really on that side.
Yeah, no, fair enough. That's very good. There was another thing I wanted to ask you before we rock and roll into the weekend, and that is about tomorrow being the 30th of June, but more importantly, a time by degrees day.
It is.
Which is interesting, and it's a bugger because it's a Friday. We've then got to wait, I think, in my opinion, we'd need probably to wait till Monday to see what the effect may or may not be. And is that too late? I suppose my question. Are we going to miss if there is a reversal, which I'm anticipating on a few things like Euro Aussie that I showed you before. This 9 days up in a row, that really interests me.
Yeah, well, it's always interesting on these dates when it's near a Friday or some other things that we know that happen. You know, biases one way or the other. So I don't think usually the time by degrees will just take its effect. Everything will go pretty normal, and then if Friday's obviously the time by degrees day, and then it'll just all probably take action on the Monday. I think if it's one of those dates where other things come into play, then you'll see it on the day. That's my experience. Okay. That's my experience. So you'll either see some big action happening tomorrow, and the volume in my world, the volume would tell you that. Otherwise, if it looks like it's doing nothing, then you're on it on Monday morning, you see, or whatever. That's generally how I'd treat time by degrees. Yeah, it's because it can happen. I think as we've observed, it can just simply change the direction sometimes of a day. Certainly enough to stand out. It can just change the direction of a day halfway down a range, but it does change the day, and then it keeps going. Or it can be at the bottom. Now, and once again, with the time by degrees, if there's a trade happening, and perhaps we could talk about what you mentioned when I was talking to you earlier today, and that was the seasonal dates that we looked at on BHP that time, remember?
Yep.
And I'm not sure whether it was that one or was it S32 we looked at this week where the volume told you that it was on the way. Do you remember what that was, Jeff, or not? Just give me a second.
I don't remember what it was exactly, no. Context I get, yeah.
I think it was have a quick look. I think it was S32 that we were looking at because that's what trade we're in that we got out of. And you'll find I found in these volatile times the volume will preempt. Yep, and I've got it here, so I'll just share the screen if you like.
Go for it.
And we'll have a look at this one. Look at that, seamless. Oh, I'm getting good at this. Now, okay, so this was specifically set up to show this. I'm glad I've kept it. Move this over here and then just grab some pretty circles to show you the highlights. Must have deleted this and put them back on, it won't matter. You'll get the point in a minute. So we can see that the big spikes in volume preempt the runs for whatever reason. It's not 100% consistent. Sometimes it's at the top when it's reversing. Sometimes it's getting ready for a run or different things, but you can sort of tell when something's going to happen. Now, if that ties in with time by degrees, then you know something's happening. That one I just highlighted, look, that's a ripper. And look at the chart.
Yep. 2 days later, bang.
I haven't even got that one highlighted, but it's sticking out like the proverbial, you know what I mean? So that's when you would have been on. And this guess time by degrees, the 6th of the 3rd, which I haven't got in front of me, it would be 4th, 5th or 6th, wouldn't it? Be March 23. The 6th of March was time by degrees, bang on. So that's back it in, you know what I mean? So that's
yep.
So that's what you were saying there about, so you just look at the time by degrees dates, and it's like we talked about also before was, the type of bar you've got, but is it in the right place on the chart? If you get a reversal bar and it's where it shouldn't be, or 3 amigos and they're not where they should be, well, it's not going to matter, is it? So that's that's how
I is everything. Yeah,
I just go, but mate, I just use the common sense. I don't sweat over it anymore. If it's lining up, you just get ready and nail it big time. And if it's not, you just stay away. But that's pretty much it. Yeah, it's interesting that we're expecting time by degrees now, and this for no reason. Obviously, but this is S32 we were looking at. It's time by degrees now, and as you know about the RSI, there's our warning. Look, there she is. So she's had a bit of a bounce. I'll put it to you, that's probably a nice little higher low there. And tomorrow, this one probably tomorrow is going to be the go, isn't it? What is it from? Time by degrees, I should say. Yeah, tomorrow. Yeah.
Yep.
So that's.
You mean I've actually got a trade on a Friday? Goodness me.
Well, I know you don't like doing that, but
it's against my religion.
But and again, but your style of trading, we're at a bottom. We need a higher low. Tomorrow I'll prove it. You get in the day after. You can see the runs at S32 as same as BHP. Good runs up, good runs down. Seasonal trades, into tax loss selling in June. It's time to go.
Awesome. All right. Well, as you know, nothing really changes for me. I still look for a reversal bar and a higher low.
Yeah, that's right.
And, so maybe there it is.
And then if it is like we believe, which we've looked at the BHP chart. Have you got my BHP chart now?
Have now, yep.
Yep. So tax loss selling in June, BHP 2022. So it ran right down to nearly the bottom of June. And then away it went. So this is all dependent on the action in the market at the time. Sometimes you get a better run down, sometimes you get less. But that was the one they got this year. So then there's your spike to tell you that the move was on the way, look.
Yep.
Something, it's not necessarily on the day, of course, but they're getting ready. Someone's getting ready. And in this case, it was a day before or 2 days before. And then away she goes. And you just transfer. This was an exercise for those that are not familiar. This is BHP, a big Australian company, obviously. But this is one that Jeff and I were looking at. This was something I came up with. I actually started this, actually. He put something in my mind about seasonal trades. I'm not sure. Did we look at this on the show, Jeff, or not? Anyway.
No, do you know what it was? Phil, it was the director's share buyback or something.
That's correct. So so we did have a quick look at it. Okay, so that's where the chart started from, and then that was last year. Then this year we transferred that across. Now we haven't had as big a run down in June, probably because in the background there's not as many losses. Look, so there wouldn't be many losses to cash in, so it was a smaller run down. But now we're going to get the resulting run up out of that. And that, interestingly enough, BHP, which is in a similar game to S32, and there's your lower low today, Jeff. Anyway, so tomorrow's. Yeah,
no, sorry, higher low,
I should say, yeah. And even there, look, not quite as strong, probably because it might be a bit early. I'm not sure. I haven't looked at it in too much detail, of course. But there's your volume spike, suspecting something on the way. So the slight reversal day there, reversal today, good strong volume today. Volume's on a slight increase in the trend, probably ready to go tomorrow. So Friday might be the day you might just have to swallow your emotions and trade on the Friday, Jeff. I don't know. You have a look at it tomorrow.
Yeah, well, it used to be golf day for me, but I can't play golf anymore.
So the social escorts in Japan interested me a little bit. Does that mean there's been no action on the neck eye and they've got to get it somewhere, I suppose? You've disappeared, mate. Your mic's overloaded.
Is that right? All right. Thanks for all that.
No worries.
I think we're out of here, aren't we? Ash, you got anything else?
No, mate. Yeah, just waiting. I'm in the waiting room right now. Got a few hours left to go.
Yep, fair enough. And that the news tonight or today, in your case, may well be a start of what Phil has just been talking about. The time by degrees happening tomorrow. It might be a kicker.
It might be. Yeah.
But I will be watching in the morning, absolutely, and again on Monday, just to see if those things that have been taking off in a certain direction and going pump, 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 like this one, actually does turn around. That's what I'm looking for. We shall see.
Cool, mate.
All right, mate. Have a good weekend.
Yep, you too, buddy. You too. And we'll be back next Monday. It's an IFP, so I might be a little bit worse for wear, but we'll get through it. All
right, awesome, man. Hey, George is back on Monday as well.
Oh, brilliant.
He's had his couple of weeks off. Thanks, Tajul. Thank you for your input as well. Thanks, everybody, for being our trading buddies for today. Thanks, Phil, for his input. And have a great weekend, everyone. We look forward to catching you on Monday. Trade well. See you later. Bye-bye for now. Bye.